John Burnett, welcome to the show.
Thanks, Franklin, for having me.
What's Bitcoin? What is it? I don't know what it is.
Question, right? Well,
Yeah.
it's a new payment system that is decentralized in the form of a digital currency with no central authority or banking system, which is quite uncomfortable for many. However, it's based on a peer-to-peer network that's powered by its users, unlike our current Federal Reserve, which is centralized and pretty much operated by the banks through our federal government.
Well, how much is a Bitcoin worth, and does it fluctuate?
It definitely fluctuates. In 2013, you've seen a range of fluctuating up and down 61, 85%. So it's it's hugely volatile. So just like any other investment, however, given the fact that it's still new and still has many unanswered questions, raises a lot more eyebrows, if you will, especially given the fact that of late, a new exchange called Coinbase all of a sudden surfaced and has huge backers, Wall Street backers, to include the New York Stock Exchange, that's trying to muscle in early to try to get a foothold in the national market here in the U.S. However, they didn't apply for a license or didn't wait for that license to be approved by New York State financial services authorities as well as California authorities. So that poses huge risk there, and there needs to be a certain amount of accountability, transparency, and protocols before you just open up an exchange.
I try to get concrete early so we don't speak in nebulous or cloudy, misty terms, especially when it comes to finances that are in principles, concepts that are as new as Bitcoin. So if you'll forgive me, I want to take it to the bank.
Sure.
How do I get a Bitcoin? And what do I do? I'm sitting at my desk. Do I go to a website and I invest in a Bitcoin? I know what to do if I want gold or silver. I know how to invest in philately. Why would I want Bitcoin? Is it an investment vehicle? Am I hoping that I can take advantage of volatility in the Bitcoin currency value? How does it work, and how do I get one?
It's all of the above, but primarily it's a payment method that doesn't go through an intermediary or bank. For an example, other payment methods might be PayPal. We've seen the introduction of Apple Pay. However, those involve intermediaries. Bitcoin is peer-to-peer payment system going outside of a bank, which you can save yourself probably maybe 1.5–2% on the transaction fees, which is huge by volume. With that said, you can go to I believe it's bitcoinmining.com, where you can actually open an account and invest. However, before you do that, I would strongly encourage all, not just you, but all potential investors to do more homework and only risk money that they're willing to potentially lose. Because we've seen over the last couple of years certain exchanges like Mt. Gox in Japan, which had about 850,000 Bitcoins and its operations worth in excess of $500 million. All of a sudden was hacked and subjected to cybersecurity issues. And next thing you know, more than half of the Bitcoins were subjected to hackers, and the exchange actually folded. So with that concern, we're reminded of Mt. Gox with the introduction of this new exchange that's trying to take a foothold in the U.S. called Coinbase. So we want to make sure that we have the proper regulatory controls, not too much, because we want the technology to proliferate, but do it responsibly with the right amount of registration, controls, accountability, and oversight.
I understand you're not giving financial advice. John Burnett is our guest here, financial services executive. By the way, you tweet and are you are at I am John Burnett on Twitter. You bring up a complex issue of safety and security. So you get hacked and then you lose all your Bitcoins, possibly.
Well, I mean, it's always a potential. This is nothing new, right? We've seen Target, we've seen other retailers, we've even seen Sony subjected to being hacked. So any institution can be hacked. However, to my knowledge, I've never heard of an exchange like New York Stock Exchange or London Stock Exchange or certain financial securities firms being hacked to the extent that retailers are. So given the fact that we have a reasonable high level of assurance, we want to make sure any dealers or any exchange for that matter, like Coinbase, goes through the proper vetting process, making sure that they're properly registered and receive a license from authorities in each state before an exchange is up and running and transacting business with different individuals or institutions for that matter. So we want to make sure that we have the right regulatory environment that provides a certain amount of controls, as well as making sure that they're continuously edifying themselves to make sure that this payment method and method of investment as well as hedging is right and is being facilitated and operated with the highest level of integrity.
Yes. Well, I have two questions, but I don't want to start with the first. The first is, what's the difference between Coinbase and Bitcoin? The second is, how can I identify the differences? For instance, if I have a transaction on PayPal, which is loosely analogous, very loosely analogous, I have a company called PayPal Incorporated or LLC or whatever they are. And I can knock on their door proverbially and say, look, I had a very spooky transaction here. Help me out. This is all under your umbrella. You are the operators. Conversely, if I'm using this is another very loose analogy, if I'm using Pale Moon, which is a version of Mozilla Firefox, many times these open source products have a very nebulous accountability. What is the difference between Coinbase and Bitcoin, and who's responsible for these two? Who stands to lose if something goes terribly wrong?
Well, I would describe Bitcoin, just to simplify it, as, let's say it's a stock, let's say, and New York Stock Exchange is the exchange. That's how I would describe the relationship. So Bitcoin is the actual virtual product, and then Coinbase is an exchange. Similar to if you wanted to buy dollars or euros, you would go to a forex exchange to buy any one of those currencies. So I think that's the best way to describe it. Now, to address your security concerns, just speaking more broadly with respect to virtual currencies, because Bitcoin is not the only one that's out there. It's the most prominent one that's proliferating. However, there's usually no one. If you lost your password in a banking system, you can always call a help desk and answer, all these types of security questions to, your mother's maiden name, favorite sport, your dog's name, and so forth, and you can get your password reset. However, with Bitcoin, it's open source. There's no help desk, if you will. So chances are, depending upon which virtual currency that you're engaged in, you can very well, if you lose your password, you have the potential to lose everything that you've invested. So it doesn't have the operations background and back office, if you will, because it is open source. So there's a lot of unanswered questions. The infrastructure probably needs to be ramped up a little bit, but I think we shouldn't be quick to discount it. I think it has a lot of potential, especially for merchants and small business and the average person wanting to circumvent banks to reduce fees and to facilitate more timely and quicker transactions. I think the greatest concern is the hacking, as well as making sure that it's not being used for money laundering and to hide illicit behavior such as nefarious behavior with regard to, let's say, terrorism.
Well, I see it as an obvious mechanism for dodging taxes. I mean, it's clearly going to be used for that. There's no way around it.
Well, it's funny that you mentioned taxation because the IRS came out with their interpretation of virtual currency, not highlighting Bitcoin, but really just going after the entire concept. And they treat it as a property for general tax liabilities.
So you have to declare your Bitcoins.
You have to declare the gains, the capital gains. Right. So they treat it in essence like stock. Or if you speculate in foreign exchange in terms of the volatility, similarly you would have to pay taxes on any gains or have a tax credit for any losses. So they don't deem it as legal tender because it's not. What they deem it as is property and an investment.
Yeah, this is very analogous to a numbered account in the use of a password, etc. Right. The old numbered accounts, which in the movies are always in Switzerland, but as you are probably well aware, it's not there anymore.
Right. And you mentioned earlier in terms of volatility, there's huge risks, not just at the investor level, but also if you're a merchant and you're accepting virtual currency as a method of payment, you have similar risk with virtual currencies as you would with foreign exchange. Because
some merchants are accepting Bitcoin. We see this all the time. So-and-so now accepting Bitcoin as payment. And
absolutely.
And so the merchant that accepts Bitcoin, what kind of a spread are they looking at? The Bitcoin is worth $5 one day and $1 the other day and $50 the next day? What sort of volatility have we seen so far, or in the last quarter?
It's a vast span of volatility, much more broader than regular currency that's legal tender. However, different companies have different risk models, and I can't speak for any particular merchant, but obviously they decided to assume that level of risk as a method of payment, and possibly hold on to it or manage the what do you call the asset, as you will, when they take in the Bitcoin, whether or not they should cash it in right away or hold on to it, and hopefully it goes up. So I'm quite sure they're managing their risk appropriately.
All right. Bitcoin and Coinbase. John Burnett has joined us at I Am John Burnett. Twitter, I Am John Burnett. Financial Services Executive John Burnett. Thanks, John.